morning and happy Monday to you. You're watching All You Need to Know on Bloomberg Quint Live and I'm Alex Matthew. First, the headlines this morning. Crisis hit Dewan Housing Finance reported a net loss of 2,223 crore rupees for the first quarter the quarter ending March 2019. The earnings were unreviewed and unaudited. Infosys reported their first quarter results that were in line with analyst estimates. They also raised their FY20 revenue guidance to 8.5 to 10% while maintaining operating profit margin guidance. India's consumer price inflation rose to an 8-month high in June, while industrial production for May grew 3.1%. Men's cricket gets a new world champion after England beat New Zealand in a super over at the Lords. And Novak Djokovic beat Roger Federer in a 5-set thriller to win his 5th Wimbledon title. Let's talk about the US equities now. They closed at a record high for a second straight day and recorded a second consecutive weekly advance. Investors remain cautiously optimistic about prospects for easier monetary policy, and that's despite a bigger than projected rise in a key inflation measure. The dollar retreated for a third day in a row. Ranita Young of Bloomberg News gives you the highlights in this report.
U.S. equities ended higher on Friday with the S&P 500 closing above 3,000 for the very first time and investors seemingly shrugging off that hotter than expected inflation data. Now, by some standards, that data would cool the case for the U.S. Federal Reserve to cut interest rates. But we see investors still betting that the Fed will do so very soon. Now, the data showed that U.S. producer prices were hotter than expected for the month of June, driven partially or mostly by trade services. And it actually showed that investors and inflation, rather, is beginning to stabilize a little bit. Meanwhile, we did see WTI rise and the U.S. dollar cooling versus major currency competitors. Now, we did see healthcare stocks continuing to drag on the S&P 500 during the session. And we also know that next week we can expect bank earnings to come out, with Citibank starting out on Monday. And that's a look at your Friday Wall Street action. In New York, I'm Ranita Young for Bloomberg News.
Right, let's also take a check on what's happening in the Asian markets. I'm joined live from the Bloomberg studio in Hong Kong by Rosalind Chin. Good morning, Rosalind. How are we looking today?
Largely trading in negative territory today, I believe. Most of the major markets here trading lower. The MSCI Asia Pacific down by 0.25%. Have to remember, though, Japan is closed for a market holiday today, but the focus really in this region is Chinese numbers. We've got GDP for the second quarter due in about half an hour from now, along with some other economic data, which is likely to set the tone for the rest of the day. If it hasn't already set it, looking at the negative numbers here, it may, or many investors expecting a little bit of gloom there coming in from the Chinese economy, which is expected to moderate. Growth there expected to moderate to 6.2% from 6.4% in the first quarter. Now, Bloomberg Economics are saying that any weakening will increase urgency for the central bank and policymakers to step up fiscal and monetary support. It would be the slowest growth if it hits 6.2% in any 3-month period since 1992 at least. Now, we had Toby Lawson from Societe Generale on Bloomberg Television earlier, and he was saying he fully expects the results to lead the PBOC to do more in terms of stimulus. And when it comes to the markets, though, that could actually help some of the markets here in Asia by giving them a bit of a nudge higher. But we'll have to see what the numbers actually really look like. And we're also expecting industrial production and retail sales numbers for the month of June as well. So far this year, we've seen auto sales and retail sales in China looking pretty weak, dragging, in fact, on those retail sales numbers and without clear signs of recovery. So really, China data, the big focus for the markets today. On Friday, we saw some trade data out of China, reflecting weak domestic demand as well, and of course the impact of the tariff war. So in general, pretty red across the board. A quick look at Hong Kong, that's down 1.2%, because I just want to mention the AB InBev IPO, supposed to be the biggest IPO of the year. That was pulled. The company stating market conditions. It's the Asia Pacific unit of InBev. And, my MLive colleagues have been pointing out, though, that if investors aren't keen on buying those particular shares, then it's unlikely they're going to be keen on buying any others either in IPOs coming up the rest of this year. So, again, not a great outlook for how the markets are supposed to be doing. Back to you.
Thanks so much for that, Rosalind. Now, just stepping outside markets for just a short while to tell you what's happening in the neighboring country in Southeast Asia. Protests continuing in Hong Kong over the weekend, where the police arrested dozens of people from the busiest districts of the island. The latest round of protests come amidst reports that China has rejected Chief Executive Carrie Lam's offer to resign. Danton Kate of Bloomberg News brings you more in this report.
The protesters have been keeping up the momentum quite well. They've got tens of thousands yesterday in a suburban area of Hong Kong, and they've been, trying to mix things up with the protests. They're not occupying one location, but they're going around to different vicinities all over Hong Kong each weekend and managing to get very sizable crowds. They tended to kind of end in violence or little scraps every night, and we saw that again last night. Two policemen had their fingers bitten off, which was some gory scenes over there. But generally, these sorts of clashes have happened. They've died down. They sort of settle for the week, and then protesters are right back out there the following weekend, still attracting sizable crowds.
Now, the Financial Times says Beijing will not accept Carrie Lam's resignation. What do we know?
Yes, that fits with what we've been hearing as well. By all indications, this looks like Carrie Lam's idea. And Beijing, it's terrible timing for them. It happened while the Tiananmen anniversary took place last month. President Xi Jinping is also involved in a trade war with the United States, where this has become an issue. So even if Beijing's very upset with Carrie Lam, the problem is for them, if she does step down, that reflects badly on them, and it provides an example of where mass street protests can remove a leader that they've essentially appointed, and for that, for them, that's a line that they can't really cross. So we saw this in 2003. There was mass protests against the former chief executive at the time for the national security bill. He ended up leaving 2 years later, which was deemed a significant amount of time where there could be some other explanation for him going.
All right, let's turn to the Indian markets now. Agam Vakil is here to tell you all about the day's trade and also what's happening in the futures and options space. Agam, yesterday I read a tweet by somebody who said, "I don't follow sports. What is this anxiety?" Because, wherever you looked, there was absolute gripping end-to-end stuff. And I think you enjoyed it as well.
Well, let's just hope that nothing. We don't.
As dramatic happens in the market.
As what we saw in cricket and tennis last evening. It was a very, very eventful evening, I must say. But let's just shift focus to the markets. And as I was suggesting, I'm not sure traders would like that kind of volatility and emotions as far as markets are concerned in this week. And for now, the SGX Nifty is not really indicating too much. We did see a little bit of a correction as far as the benchmark indices go, but we also saw the broader markets outperform the benchmarks. In terms of the banking Nifty, again, 0.5% cut for the Nifty Bank, the Nifty PSU Banking Index advancing. So we certainly have seen a lot of mixed cues coming in through. Let's take a look at the ADRs then. And in terms of ADRs, Infosys strong, up 6.5%. A bunch of positives coming there. We'll talk about that in just a bit later. But of course, Tata Motors and Vedanta advancing. On the other hand, we do have Dr. Reddy's, ICICI Bank and HDFC reducing, coming off to a certain extent. Moving on, we have FIS selling stock worth 850 crores. Do remember, this number has now increased because we were used to 200, 300, 400 crores, and now it's once again nearing 1,000. DIs, of course, on the other hand, buying a little more than what the FIs have sold on a net basis. But as far as your contributors go, it was just a 30-point decline, so it wasn't substantial. But still, we did see L&T, HDFC Bank, and Axis Bank cancel out the gains seen in Infosys, Asian Paints, and Sun Pharma. Infosys, of course, is likely to advance, at least as far as the opening is concerned. But moving on to your futures and options space, we can take a look at, of course, this unwinding in futures, which is down around 3.5% when it comes to its open interest. Moving on to your Nifty banking futures, we do have 2% increase and possibly towards a little bit of a short build-up. But coming down, moving on, let's talk about your open interest distribution. And well, 12,000 call is the one with the maximum open interest. So on the lower end, it's fairly uncertain if it is with around 11,500, 11,300. We just had to wait and watch as we move through the course of the week about as to where that big support lies. But moving on to your change in OI, of course, we have seen a little bit more writing around 11,600 and 700 calls. As far as your other key variables are concerned, when it comes to your India volatility index, that has come off by around 4%. Surprising, considering we did see a little bit of correction in the Nifty. So this, of course, is that balm which soothes those who are long in the market, which also indicates that there isn't as much volatility expected in the near term. But the put-call ratio, of course, is at around 1.14. It's still at a fairly neutral level of around 1.1. Moving on, of course, we have Divan Housing Finance, IDBI Bank in the F&O ban, along with Reliance Capital and Reliance Infra. In terms of other stocks, we're keeping an eye on Max Financial, Amara Raja Batteries and PFC. And in terms of stocks which are seeing unwinding, well, Nalco, Dish TV and Tata Steel. So there you have it, Alex. It was a very, very mixed day of trade. We can't really go by indices, and that is something that's likely to play out today as well. All eyes on two very positive results. One is Infosys and the other one is Avenue Supermarts.
Thanks so much for that, Targum. All right, let's take a look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the First Word headlines.
U.S. companies may be approved to restart sales to Huawei, this within 4 weeks, according to Reuters. It says the Commerce Department is currently evaluating all licenses. This after Huawei was blacklisted over national security concerns. Meanwhile, Huawei is said to be ready to cut jobs at its U.S. subsidiary. The Wall Street Journal says the cuts will affect employees at FutureWay Technologies, which is a research and development company with about 850 in staff. To Hong Kong now, protests there continued throughout the weekend, including violent clashes with police in a shopping mall late on Sunday. Demonstrators are maintaining their demand that Chief Executive Carrie Lam resign and for an independent inquiry into claims of excessive force by police. The Financial Times says Beijing has refused Lam's offer to step down, telling her she is to blame for the situation. To Turkey now, President Erdogan is promising significantly lower interest rates by the end of the year, a week after firing the governor of the central bank. He says the aim is to bring inflation down to single digits and cut borrowing costs at the same time. Last month, Erdogan complained that while the U.S. Fed is moving towards a cut, Turkey's policy rate of 24% was unacceptable. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan, this is Bloomberg.
All right, turning to news on India's macroeconomy. Retail inflation continued to rise in June, led higher by food prices. CPI inflation rose by 3.18% in June compared to 3.05% in May. According to data released by the Ministry of Statistics and Program Implementation on Friday. Pallavi Nahata takes you through the key highlights in this report.
Retail inflation rose to an 8-month high in June, led by higher food prices, particularly in urban areas. CPI inflation rose to 3.2% in June compared to 3.05% in May. A Bloomberg poll of 38 economists had estimated inflation at 3.1%. Inflation in food and beverages rose to a 12-month high of 2.37%, driven by pulses and meat products. The pace of growth of urban food prices continued to outstrip growth in rural food prices. The divergence was steepest for fruits and vegetables. Despite the consistent pickup in inflation, it remains well below the Monetary Policy Committee's target of 4%. With the government staying away from any direct fiscal stimulus, the MPC can now look at more rate cuts. On the other hand, IIP growth moderated to 3.1% in May compared to a revised growth rate of 4.3% in April. While growth in manufacturing and mining moderated, it saw a modest increase in electricity generation. Industrial output classified by end use fell across all verticals except consumer non-durables and construction and infrastructure.
All right, let's turn to earnings now. Infosys reported their first quarter numbers post-market hours on Friday. The numbers were by and large in line with consensus estimates. But Agam was here just a few moments back and he told you that this was a positive result. Agam, why don't you tell us why you say that?
Right, Alex. So the positives, of course, were more than just the results, were beyond the results. And of course, when it comes to the earnings, we did see about 2.3% growth in dollar revenues, and that was largely in line with expectations. There was a little bit of an improvement too when it comes to profitability. Of course, margins were in line at around 20.5 against 21.5, and again, we were expecting that drop in terms of margins. We saw that drop around 90 basis points. Profits were down 6.7% at around 3,800 crores, and this was slightly above expectations at around 3,737 crores. Now, two positives. First one was the increasing of the revenue guidance. So the FY20 guidance has been up to 8.5 to 10%. From 7.5% to 9.5%, and that does augur well because now even Infosys is suggesting that the upper end could be in double digits, well, not unlike its peer TCS. Of course, they maintain their operating margins guidance at around 21 to 23%, which they had, decreased in the previous quarter. So nothing that's been factored in. In terms of large deals, they once again registered another of the largest quarters in terms of the deals signed, that comes to the tune of $2.7 billion. And digital revenues also grew 42%, and they now comprise of around 32% of the total consolidated revenues. Moving on, as far as margins are concerned, well, they did contract, and this again on largely unexpected lines because of wage hikes, higher visa costs, as well as a stronger INR against the US dollar. But in key verticals, against what we saw in case of TCS, we've actually seen growth in both BFSI as well as retail segments, two of the bigger verticals for Infosys. Finally, one more important factor is that Infosys has revised its capital allocation policy, which means that it will be returning about 85% of free cash flows cumulatively over the span of the next 5 years, in comparison to 70% earlier. So that, of course, also augurs well when it comes to sentiment on the stock. And that's also the reason why, well, the ADRs have advanced by around 6.5%, and we are certainly expecting a positive opening for Infosys this morning as well.
Thanks so much for that, Agam. All right, let me take you through news on the primary market and, in fact, what the government might just be bringing to the table. The government plans to list at least 10 public sector companies this financial year, and that's not all. The plan is also to bring down stake in all listed entities to a combined total of 51% over the next 1 year. Nikunj Ori has the details on exactly what's been worked out by the Department of Investment and Public Asset Management.
The government has a strategy in place to meet its ambitious divestment target of a little over 1 lakh crore rupees in the current financial year, and according to the plan of the government, in the next 1 year, the government is going to list a number of companies on the exchanges. It's going to go ahead with the strategic disinvestment it had planned and which has been taking some time now. It's also going to redefine its equity holding structure and also introduce a new ETF or exchange traded fund especially for financial sector companies, and divest the government stake in these financial sector companies. As far as companies that are headed towards the exchanges, there are about 10 companies that have been planned by the government, which it intends to list in the market in the current financial year. The government has already is already looking for book running lead managers for IPOs of 2 public sector companies, that is Railtel Corporation and THDC, which is Tehri Hydro Development Corporation, and 8 other companies that it plans to list on the exchanges this year. As far as strategic disinvestment is concerned, we've seen a delay when it comes to strategic disinvestment. We've seen Air India's divestment getting delayed, and several other companies which have been delayed because some of the other reasons. Now the government plans to go ahead with strategic disinvestment and has shortlisted about 14 companies which are small and mid-sized companies, which is going to go ahead in this divestment. And Air India, as far as Air India is concerned, the government has said that it's also going to divest Air India in this financial year. Besides this, the government has also come up with a new definition of government's holding in public sector companies. It intends to bring its stake below 51% or up to 51%, in which the government's as well as government-owned institutions' stake is concerned. So we'll see a government's holding coming to 51% in many of the companies, and also below 51% on a case-to-case basis, as the government has said, and it has also been informed by the finance minister in the union budget. There's also one more thing that the government is planning to do now. It aims to bring down the minimum public shareholding in public sector companies. Now, as the finance secretary recently said, that various government-owned departments ask or seek extensions to meet the 25% mandatory 25% public shareholding norm, and now the government has made it a point that it is going to stick to the minimum public shareholding norm of 25%. And as of now, there are about 16 companies in which the government owns more than 75% stake, and some of these companies are ITI, Hindustan Aeronautics, Hudco, Ircon, Rail Vikas Nigam, in which the government will have to bring down its shareholding below 75%, so that the minimum public shareholding norm as mandated by SEBI is followed. And lastly, the government's ambitious project, if I may call it, the exchange traded fund, which has helped the government in garnering a huge amount as far as divestment is concerned. The government plans to come out with a further fund offer of CPSE ETF, through which it will divest its stake in various public sector companies, and also come up with a financial sector ETF, which will have which will help the government in divesting its stake in financial sector companies.
All right, let's turn to stocks that you have to watch out for and trade today. Mishika Parak is joining now to tell you all about the stocks in news. Morning, Mishika. What's on your list today?
Good morning, Alex. We're completely into the earnings season, and there are lots of results that we need to look at. First on the list is Avenue Supermarts. Their revenues are up 27%, profits are up 32%, EBITDAs are up 41%, and margins stand at 10.3% versus 9.2%. Now, their margins have increased after 3 quarters of decline, and the company has added 8 stores in Q1 of FY20. Morgan Stanley says that the gross margin expansion of 50 basis points is a key positive, and Credit Suisse has upgraded the stock to neutral from an underperform, with target price of 1,330 rupees from 1,175. Next on the list is Diwan Housing Finance. Their net interest income is up 45%, though asset quality weakens. The loss stands at 2,223 crores due to provisioning, and the company defaults on non-convertible debentures interest payments worth 48 crores. Then we have Hathway Cable. Their revenues are up 17%. They had a net loss of 10 crores versus a net loss of 52 crores, and there was an other income of 57 crores in the current quarter. Their EBITDAs are up 29%, and margins stand at 20.7% versus 18.7%. Karnataka Bank's net interest income is up 5%, their net profits up 7%, and provisions are down 8%. The asset quality is weakened quarter on quarter. The last set of numbers are coming in from TRF. Their revenues are up 1.5%. There was an EBITDA gain of 4 crores versus an EBITDA loss of 25 crores. Also a net profit of 12 crores versus a net loss of 60 crores due to exceptional gains. Lastly, let's have a look at the important bulk deal. The Windacre Partnership Master Fund LP buys 6.35 crore shares, which is about 2.4% of PFC at 124.8 rupees each. And UBS Principal Capital Asia Limited is the seller in this deal.
Thanks so much for that, Mishika. Let's talk about sports now. For some of you, it was a Sunday of ecstasy, while for some, it was a Sunday of heartbreak. England and New Zealand etched their names in cricketing folklore with an epic final of the ICC Cricket World Cup at the Lords. When the two teams were tied on 241 at the end of their respective 50 overs, the match was to be decided by a super over. While that too ended up being a tie, England were awarded the match on account of hitting more boundaries. Ben Stokes was the man of the match for his all-round efforts, both during the innings as well as the super over, while New Zealand captain Kane Williamson was player of the tournament. While England and New Zealand were engaged in their photo finish at the Lords, Roger Federer and Novak Djokovic were playing out their own epic at Southwest 19. The first men's single final to be decided in 5 sets since 2014 saw Djokovic, the world #1, prevail over crowd favourite Roger Federer 7-6, 1-6, 7-6, 4-6, 13-12. And if reading that is that difficult, you can only imagine how difficult the match was. This was, of course, Djokovic's 5th Wimbledon title and 16th overall. Among the ladies, it was Romanian Simona Halep who triumphed over 23-time Grand Slam winner Serena Williams in straight sets, 6-2, 6-2 on Saturday. It was Halep's first Wimbledon title and second successive after she won the French Open earlier in May. All right, there's clearly lots to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. There are also several stories on the website, bloombergquint.com, that you should consider reading. Let me take you through just a couple of them. First up, Emami Group has picked Upwood Capital and Credit Suisse to manage the sale of its cement unit, according to a source-based Bloomberg report. The bankers will start reaching out to prospective buyers for Emami Cement, seeking a valuation of about $1 billion. A decision is yet to be made, though, about the size of the stake to be sold, and the group can add more managers for the deal later. Now, the fight between promoters of Indigo continues, asserting that the arrangement between the promoter groups had been transparent from the inception at Indigo. The Rahul Bhatia Group on Sunday claimed that Rakesh Gangwal always limited his financial risks and was making insidious efforts to create a controversy about corporate governance. That's all you need to know going into trade today. Do stay tuned. There's a lot more coming up in just a short while. This is Bloomberg Quint.